Hi, everyone. Hi, everyone. Welcome to Analyze Your Trade, episode number 81 from Timing Research for 2019. Today, we will be discussing your trade ideas. So over the last few days, about 30 people submitted up to 5 symbols each, and I have put the list together of some of the top requests here, which you should be seeing on your screen right now while I'm talking. We are going to get through as many of those as we can, and we are broadcasting live on YouTube at 4 p.m. Eastern Time, but you can also listen to the audio-only podcast version of all episodes on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. My name is David Cosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Marina Villatoro, Bryan Klindworth, and Jim Kenney to moderate. So I'm going to go ahead and turn it over to Jim.
Okay, great to be here, and great to have everybody here as well. We're going to go around the horn here and let everybody introduce themselves, and then we'll get into the stocks that were listed for us, and also some different trading ideas that might be out there as well. So let's start off with Marina from TraderChick.com, and I think she brings an international flavor to the meeting here. So give us a little background, Marina, and let us know a little bit about TraderChick.com.
Okay, well, thank you so much for having me again. I really enjoyed the show. I am Marina, the trader chick Villatoro, and I am an expat living in Antigua, Guatemala. My main focus is usually futures. However, since being invited on the show, I really started to get more into stocks, more into the swing trading part. Futures, I do strictly intraday, actually more like a scalper, really fast, 3 minutes to 15 minutes at most I look at. So I have very short time frame. But however, for the stocks, I'm starting to really look more, and I'm really interested in the stocks that you guys all picked. So I'm excited to get into it with you. Thank you.
Okay, great. And we have Bryan with AlphaShark.com. And Bryan, a little background and a little bit about AlphaShark, please.
Yeah, absolutely. My name is Bryan Klindworth, and I work for Andrew Keen's AlphaShark.com. We run one of the only couple all-day, full market hour live trading rooms on the web. And our first focus is unusual option activity. So what you see the Nigerian brothers do on the halftime show, sometimes when it gets real ugly, they tend to disappear. We do that all day long, every day. There's 4 moderators that manage that room in order to watch for continuous unusual option flow. So primarily I am an option trader. I trade a cash-based option account because I'm still pretty new. So my focus in how I approach things is for the newer trader or the smaller account trader. Ideas that won't blow up your account if they go against you 10 times in a row. That being said, we are getting ready, me personally, to expand into futures, and I may borrow some futures analysis techniques for this segment here just for a little bit. We also we design, backtest, and market custom indicator sets and tool sets and trading systems that are available for the consumer.
Okay, sounds great. And we got a lot of stock here. Some are familiar, some not so much. Let's get started here. First one is IGT, International Gaming. And let's take a look at it, Marina, and give an idea. What do you think?
Okay, let me just share my screen really quickly here with you guys, and I'll show you what I'm looking at. Okay, so here we are. I am looking, so this is about a year's worth that I am looking at here in the day. I prefer to go for the 1 minute. I know it's a little bit too small, but however, if you notice, today was super, super flat overall. So at the moment, to be honest with you, I don't like the way I look at the markets. I don't like to predict what is going to happen, if it's going to go higher, if it's going to go lower. All I know is that I'm looking at a really strong channel right here, and that's pretty much what I would like to just kind of sit and wait it out. And once the market itself shows me that it's going to go either in a hot and going upward or going downward, that's the only time I would actually consider going with the movement of the markets, because I really love to short or to go long. It really makes no difference to me. I don't look at fundamentals in that respect as much as what the market tells me, and especially with a Vegas, company, I don't really look at fundamentals. There's way too much drama, and I'll get more into that with the next stock, just because. But if I was going to go into analysis again with indicators, I love the MACDs, and if you look at the MACDs here, they are so flat that it's not even worth my time to consider an entry of any sort right now. So basically, I would personally just sit it out for tomorrow and see what the market is going to do in that respect. So that's my 2 cents for this one.
Okay, that sounds great. And Brian, what's your take on international game tech?
Well, I think I'll backpack on Marina. Is my microphone working okay? I'm not getting an indicator that it is.
Yeah, it is.
All right,
Perfect.
wonderful. I'm taking a look at the option chain here on IGT because this is, well, it's almost cheap enough. You could take an equity play on it if you want to get rid of any issues with theta, delta, gamma, whatever you don't want to deal with. But we're a little elevated here on the option chain, 48% on the monthlies. Notice there are no weekly options. So first, ding, ding, ding in the back of your mind. It's not the most liquid chain in the world, although there is plenty to work with here. But take a look at the open interest here on call side for June, put side, call side for July, put side. Now, the option chain is telling us, particularly when you go all the way out to October, where there's some real commitment here relative to the underlying price, it is relatively bullish on the put call. That being said, the chart, take a look at this. I mean, we have a massive triple top. We are coming out of earnings, right? So, like I said, I run a cash-based trading account. So I'm not looking for the big 1 month swings. I want the 5 to 7 day swings if I'm going to take them. This is a proprietary indicator set that gives me a range based on option volatility that's projected out 21 trading days. Right now, I just got a long signal here. On a fundamental basis, this is IGT. More and more states are looking to expand their gaming footprint, which is the only bullish fundamental I've got for this. And probably when we start to talk about maybe that's not so great here in a little bit. Last earnings, TOS is not giving me their meat. They paid their divvy. They're coming back up. I feel like I do not like trading options on anything that's under $20, especially with a 55-cent ATR here. Now, this is a 5-day average ATR. This is another custom tool here. There's just not enough profitability here in a 5 to 7 day window based on the ATR relative to the underlying price to make me excited about it. That being said, an upside target on it is 14.5. A downside target on it is probably 12.19. We're going to land somewhere in that area based on estimated market maker projections. Again, for me, even though we've gone bull here, and it is nice and affordable on July with these spreads, not interested. We have better option trades out there.
Yeah, it has lost half its value in the last year, and it does have moving averages pointing straight down. So it's a rough racket. But if it did get above certain levels, I guess short covering could come into play a little bit, right?
Oh, yeah. What is the short interest on that? Do you have that offhand?
Not too great, not too great. But there's a big gap when it went from 18 to 16. That's kind of big. So
yeah, let me pull that for you real quick.
It'll be hard to get to that gap unless it can get some.
Oh yeah, we're gonna need so much price movement to the upside to create a short squeeze. Nope, don't want.
All right, not too much on this one. Let's switch to the next gaming stock, WYNN, and see if that has a little bit of a brighter future. Marina, what are we thinking about WYNN Resorts?
Hi. Okay. Sorry, I was muted. Let me just share that with you guys as well. Okay. So WYNN. Well, the way I actually look at stocks, because I do really enjoy stocks as something that I invest in, especially for my kids' futures, like more long term. And the way I personally look at it, maybe this more of how mothers do it. I think whenever I speak to other women traders, we have that more. We get very personal about who's running the company, what's going on with the company. I don't invest so much in just the company as I do in the management, or if it's a disruptive company, or the CEO, and with the whole Me Too movement and just the whole thing that's been going around, the whole drama. I'm not going to take sides in that, but I have to say, the owner, which now I think has stepped away, he's just all gross to me. So I personally would never even consider myself going into stock like this, because of that particular thing. It's just bad morals, bad way of making money. So that's like my personal intake. If I'm going to look at this chart here right now, I mean, you could look at this triple bottom, right? And it did head back up a little bit, but it did not go very far. So it's right now kind of teetering around here. It's showing me a mini triple top as well, and it's kind of headed down. I think that there's just a lot of indecision, maybe even a lot of not sure what people want to do, and I'm kind of with them on that one. So that's kind of just my own 2 cents on that particular way. It's more of a personal thing, a company that I wouldn't want to invest in.
You know, like the industries, like if you were against cigarette smoking, you wouldn't buy Altria. But
no, it's not. It's not casinos. Oh God, no! I'm totally for that, especially because it's regulated. It's just, I think he's a dirty. He dealt with the whole business dirty. I'm sure now it's changing around and there's more eyes on it. I think that's what it is. No, I actually think Vegas on a whole is fantastic, especially with the family, like all of that. Like as far as the market, just this particular thing, I think is a little bit too much drama, too much uncertainty, and too much cleaning up.
Right? Yeah.
Yeah, it's just too much cleaning up that needs to be done. Oops.
Yeah, and Bryan, how are you checking out WYNN Resort as far as the technicals?
Okay, so WYNN Resort for me. Let me make sure I'm sharing my screen right. Here's what I'm seeing on WYNN Resort, and I just did something that I loathe to do, which is I put up Fibonacci's. I personally, I prefer just to eyeball it based off price movement. Now, these are not quite exact, but they're close enough. We've come out of a couple of major events here on WYNN on a balance sheet basis, right? They've paid their attractive dividend of $1, and they came out of earnings. Additionally, based again on this option estimate cloud, we are now back into what is this estimates neutral territory. I have a long signal here, and I have a multi-trend crossover to the long side. But I don't want to focus too much on stuff that we write, and instead I want to go back to stuff that everybody has access to, which is the retracement off of this 151.24 high. Beautiful, organized selling. We only had a couple of days of real spastic volume here, right? So we're organized selling. Then we get on the other side of this. We start to lay in a base with the attraction of some volume coming back. And so at minimum, I think the technicals say a retracement to this 50% mark at 125.65 off of the current trading price of 118.28 should be attainable within 21 to 30 trading days. And on an options trader's radar, that's relatively decent. Additionally, the ATR is coming in to indicate some stability, but a lot of the aficionados of fibs will tell you the 38.2 is where you're going to be. Personally, in my experience, I prefer the 50 because it's a little more conservative, but that is enough room on a not a front month call, but a July or August call for the R&R to work out to go long this name without relying on anywhere near a full retracement of this sell-off. And so for this reason, I would say minimum of July, probably August, maybe even September calls, looking for this fib retracement to 50% around the 125, 126 area. And if you're like real diligent about your fibs, you could maybe see the 38.2 at 130 before we roll back over. Everything is within this option cloud that we developed. I'm happy with it. I think this might be a long on a conservative long-term option with plenty of time on it.
Yeah, this stock had about a 60% jump from December to May, late April, and then fell off a cliff. So I'd probably check the news on the Massachusetts casino that they've got and see if that's not going so well. And of course, the connection to Macau, the China deal, and all that kind of stuff might be having some effect. But after a 66% jump, it just lost about 30%. So it's a volatile situation, that's for sure. All right, let's keep going here, and let's look at HSY. And Marina, we're going to start out with you here, and
Okay.
we're going to get your opinion and your views on Hershey chocolates. Let's go.
Okay, so I personally really like this company on many levels. Like I say before, a lot of the way I look at companies is through my morals. And personally, I believe that they just do everything right in so many ways. So the fact it is to me, this stock is similar to me like a Disney stock, but obviously a little bit different. There's just so much business that they're doing outside of just the chocolate. If you've ever visited Hershey World and just Hershey, Pennsylvania, you can see all of what is happening. It's a whole ecosystem around that particular thing. So for me, this is a beautiful stock, even though it had been pretty flat for the majority of the past few months, and then it completely went up, which is right here, as you could see. So basically what I'm looking at, if I was to go into this particular stock on pure technicals, I would kind of wait for a retracement at the moment. It's really went up quite a lot. It just had a dividend. So basically what I would do, oops, sorry, hang on a second. Oh, I don't know what I just did here. Yeah, I don't know how to fix this. Oh, there we go, there we go. So I would wait for a retracement, right? So we've headed up. It's been pretty flat. Then it kind of went up here. It retraced. Right now it's sitting really high in comparative to the rest of the year. So I would wait for a retracement to see what happens. And if it goes below this, if it does not go below this, this is where I would bounce up to at least make it to this top, to its highest point. So it would not be a very long hold, but because it was pretty exponential if you see it. I mean, it went up, I don't have the percentage in front of me, but 20 points, right? That's a lot in the past several months. So that's what I would look at right now. But the company is strong. The way it treats its employees and all of that it does, and Hershey overall internationally is a super strong company. And that's what I always look at, the personal end of it. I'm in Guatemala and Hershey's huge here. If it's huge here, it's huge internationally. So that's a really great sign for a company as far as I'm concerned, especially for long term.
Okay, so a pullback possibly, and then take a look at it on a pullback. Brian, where are you at?
Yes.
Give me 2 shakes. Get my screen sharing working here. Is my screen up?
Yep.
All right, beautiful.
Yep.
Okay, so this is looking at Hershey's by itself. Now, there's something that we need to talk about in regards to Hershey's, and that is their relationship with Nestle. Now, Nestle is involved in a whole lot of stuff. One of those things that Nestle is involved in is they are trying to compete with Beyond Meat. And so you can get some kind of collateral movement in names like this that have those business relationships. What surprises me here is this sell-off on Hershey's. So when we were going through the list this, before we actually started airing, I said, well, what does Hershey's look like compared to the S&P 500? And this is the compare function on TOS to show that Hershey's just now caught up to this most recent high on the S&P 500, that second part of what might be that real scary double top, and is exceeding on a daily basis the S&P off of what I think is mostly this Beyond Meat. Now you see this volume come in here as well. This is pretty close to the Beyond Meat IPO date. And I think that we're going to get more movement as kind of sort of a derivative value. God, I hate the word trickle down. But I think that Hershey's is bullish here based on the fact that Nestle is going to compete with Beyond Meat.
Okay. And as far as Marina was talking about a pullback, it is about 23% above its 200-day average. In my definition of overbought, it definitely is in that arena. So a pullback shouldn't be too surprising if it does happen. And then it's a defensive stock, I guess, right, Brian? A little bit. People are buying utilities now, and they're buying stuff like Hershey's, where even if the economy weakens, we're going to hit the chocolate anyway.
It depends on where you want to define the beginning of the defensive stock run, right? So we're looking obviously for December. That's like the last definable moment. If this was going to behave as a defensive, then I would look for behavior around Christmas Eve, but it stayed flat. Now, speaking of defensive, like XLU, they are migrating out of XLU. XLU is getting sold here. Now, the reason why I think that is that it's coming into bonds. So now we're coming into defensive level 2. So from a macro point of view, looking at defensive stocks from an investment standpoint, not a trading standpoint, but an investment standpoint, that's going into any stocks at this point is not as defensive as maybe going into bonds, although you might be catching the bottom there. So it is somewhat a defensive, but these charts aren't correlating nearly as well with the S&P 500 between Hershey's, XLU, and the SPX. So I think we're getting bleed through value on Nestle and their competition with Beyond Meat. And so I would wait for a pullback. Obviously, that's fantastic. Anytime you can get a pullback for a swing entry to the upside. And I'm a more patient trader than most. So watch for a pullback or an evening, and then getting that second mover on Nestle off of Beyond Meat might have some real value.
All right, the next one's going to be a retailer that's been getting a lot of money coming into it, Walmart, because people obviously are liking the retailers they're discounting versus some of the other retailers like Kohl's, et cetera, that aren't discounters. And Walmart has had a big run. So, Marina, we're up near the 110 area, and a 52-week high was made today. What's your call on Walmart?
So for me, I'm looking at Walmart. There's a lot of controversy with Walmart of how they treat their workers and all of that. I think it's an amazing company. And like I said, I also judge so much from a small country like Guatemala. And it's not only Guatemala, Central America, Walmart is huge here. So that to me shows strength, period. That's a really good gauge, honestly, to see the strength that is going. I love this company. I think it's a fantastic company. However, it is in a channel. I know that it broke through and it hit its 52-year, but it's in a channel. I think now what we have to look at to see if it's going to continue up, and if it has a retracement, I would actually consider going in once it retraces a little bit. But if it could also do a FOBO, which is a fake out breakout. It could go up and then head back right into this channel, because this is a pretty strong resistance area. You cannot deny it. Here, it's a pretty strong support area that had this. This is what I would call a FOBO right here. It failed to continue down. It kind of really liked its high, and then it just flew up. So right now, I would definitely not go in for a long. I don't really short these types of stocks. It's too big of a company to short for me. I would look to see what it does. If it continues up, or if it does that fake out breakout and goes back into the channel, again, I would sit to see if it's going to break through the support. So for me, this is a wait and see what happens type of a stock.
Yeah, you're definitely right that it's been up in this neighborhood 3 times in the last 3 years or so in the 110 neighborhood, and it has faded out. So it'll be interesting to see. The P ratio is 37. One of the problems with some stocks right now is the valuations are very high. Yeah. And so earnings coming out next month, if they don't hit the earnings number and the valuations are off the charts, that could be vulnerable, but you never know. Brian, you got a take on it? What do you think?
I do. Thank you. Thank you for the fantastic setup, Marina. I agree with you 100%. This is a FOBO setup, 100%. It is going to potentially break this area, and then we're going to run into some real realities, that earnings report, right? And then also Walmart's big gains on a fundamental basis really have been off of e-commerce. I think the e-commerce reality, as far as a retail provider, is starting to move over and get over that inflection point to network effects, which means Amazon. I'm sorry, it means Amazon. And yes, Walmart can look okay for a while. Best Buy can look okay for a while. Just like, I don't want to date myself too much, but just like WordPerfect looked okay for a while. Lotus looked okay for a while. Now, what does everybody else use now, today in 2019? I think that this earnings report is probably going to, it might not disappoint right away, but for a longer term investment play, absolutely, I think Walmart is too expensive. Way too expensive for an investment play. For a swing trade play, there's much better options out there. I mean, the ATR on this thing at a 107 underlying is only 1.632. I've got much better choices here for swing trades. I think we're going to run up into that FOBO. Everyone's going to get excited on retail, buy in, maybe move Walmart to 113, and then the real players are going to pull the rug out, and they're going to get stuck.
All right, well, let's turn to the next guy here, which is Box, from a company I'm not that familiar with, software company. And BOX is their symbol. And Marina, what's your take on Box?
Okay, so honestly, I don't know anything about this company. But just from a technical standpoint, just looking at purely technicals, I mean, this is a really beautiful support area going on here. It's going to either stick through it or head down, but at the moment, it just does not want to head up. So again, I would just wait and see with this particular one, purely technical. But as far as what this company does, I honestly can't tell you much more than that. So that's just what I.
Yeah, Brian, do you have anything on Box?
I wish I did. I wish I could tell you what they do. They
They're
do
software as an
something.
industry.
Yeah, they're a cloud company, a software cloud company, founded, and I'm pulling it up right now. Founded in 2005. Looks like it's more mobile focused, but CRM. I mean, for anybody serious, CRM is where it's at. And I think that my screen kind of says it all. Take a look at Box compared to, again, the S&P 500 here on this little comparison tool. Let me reset that so everyone gets an honest visage. That being said, this double bottom is gorgeous, and they beat earnings. They beat earnings. They were only supposed to miss by 3 cents, or excuse me, they were supposed to miss by 3.9 cents, missed by 0.3 cents, and it has given a gorgeous technical bounce. Sometimes on option trades, some value can be found in companies like this, but with this kind of IV, this low of liquidity, I mean, it's not too terrible on open interest, but on that daily interest that you really want to have in order to get in and out on those day trades, because I'm not so sure about swing trading this. I would personally take a pass on Box until we get out of this island area that's been defined here. This bottom is a little different than the bottom on a TA perspective. These bottoms here were defined in trends, right? A little bit of a gap there, but it got filled. Now we're still dealing with an island, a massive island. I want off that island. Before I get on this, I'm leaving it alone.
Okay, yeah, I was just looking at a couple of things that might be important. The 50 and 200-day average are 19 and 20, so if it can't get above those numbers, it doesn't have much of a future. And the volume today is interesting. It's about 50% more than normal, yet the stock didn't go anywhere. So I don't know what that all means, but that's what it says. Let's turn to the next stock, and TDOC is the symbol. And TDOC, we're going to go right to Marina and get her an idea of what Teladoc Health looks like to her.
Okay, so I'm actually going to pass on this one. I've never heard of this company. I don't know. Yeah, I'd rather not even give my 2 cents.
Okay,
I don't know.
Yeah, that's fine. Yeah, Brian, do you have any take on this Teladoc?
I have never heard of this company, but I am going to give a take because I'm sort of a purist technical analyst. I don't necessarily need to know what you're doing. I just need to see the stats and the data and make sure that you have the volume and the liquidity, right? So we're going to go to the option chain. Liquidity looks borderline, but doable if we get unusual option flow. So what I need to see to get involved in TDOC IntelliDoc. And I think I'm about 75% sure I've actually encountered this company in the wild when I went to a doctor's appointment and my doc wasn't in, so we had to do a teleconference, right? I need to see unusual option flow to get into it. Now, that being said, we did have for June some 384 calls come in on the 60 line, currently trading 57.71. Now, these tools that we develop here, the trading today was not overly volatile, and we are undervalued compared to the S&P 500 on a 1-to-1 multiple. Now, normally that's a little dangerous to use, but look at how they traced it during the sell-off and that initial move out of the sell-off up into this area here in late February. So there could be a potential value play here. I would wait for a big option order to come in on this. The last thing I have to say about them, their earnings, the last earnings report was about on the money in terms of EPS. There's better options. To be honest, I think we have a better option on this list. So we're going to pass here.
Sure. Yeah, like I say, the only interesting thing jumps out to me is the short interest is 28%, which is kind of heavy, and the moving average is around 62. Gives you an idea that there could be a little bit of a ceiling above. And the volume today kind of was light, 812,000 shares versus normally 1.4 million. So the short interest and the volume drying up, those are interesting. Have to see how things go on that.
Do you mind me expanding on that? Actually, thank you for looking that up.
Sure.
It's always difficult to pick what to put on your charts because I don't like getting too crowded here. All right, so you're saying which moving average is where?
The 200-day average is around 62 and change. So there's some resistance that way above the market. And they're inverted with the 50.
That changes a lot of stuff. If we crack this 62, look at the price action here. This is if we can crack this, then we should start to get maybe into some short squeeze territory, maybe throwing out like an option where your max loss or a spread where your max loss is very, very limited. Once we crack this area, could have a great, fantastic payoff as long as you give it enough time to expiry to grab that short squeeze off that 30%.
That, that's always a potential when you get that heavy short.
Yep, that's real heavy short.
We're going to turn now to a more familiar company that's in the cloud area, and that is Salesforce. And it went up pretty sharply, and now it's rolled over a little bit. They have that big acquisition. Marina, what are you thinking on Salesforce at this point?
Okay, so basically I don't really follow Salesforce. All I'm seeing right now is this massive resistance area. And this is a company that I would actually even consider shorting because it just looks like it doesn't want to really go through anything. It's really, I would consider shorting not that much, like around 150.15 around here until around 143. Yeah, I like it. It looks like it just does not want to break through. It's kind of hanging out, and then it might even head down here, but I don't want to predict that far away. Like I like quick entries for this type of so I don't know much about what they're doing. This is purely watching their strong resistance area, and it's just failing to go up. So that's
the two things on this is obviously the valuation is extremely high, and the second thing is they just bought Tableau for like all kinds of money, and they believe it's a great acquisition, and then Wall Street will tell them what they think of it. But another vantage point would be from Bryan, and what are you thinking on Salesforce here?
Well, first of all, Salesforce did not buy Tableau, which their ticker is Data. They didn't buy them for a lot of money. They bought them for a lot of equity.
Oh, yeah, they're using their stock. Yeah, right.
Yep, they are using their stock. The Salesforce CEO was on TV yesterday, post-market. Now, as soon as you see him get on TV, of course, your BS meter goes up, right? Guy seemed fairly genuine when he said we offered him cash and they said no. So this is the potential end of Data, right? So Data is a symbol that was completely tradable before there was rumors that Salesforce was going to take them. I think on a fundamental basis, that acquisition could pay. As soon as, and I'm going to go back here to, let me maximize my sell on obviously this high volume day. We saw a mountain, an absolute mountain of August 155 calls come, which are going to be out in this area here. I think that's now, it was too soon for me to take this trade. When I see something like this and a mountain of calls come in, I don't have the account to absorb that kind of a loss. But I'm going to watch for, this is what I wanted to see today, a sell off on Salesforce. I'm going to watch for the following pattern that I've seen time and time again happen, which is going to be, we're going to bottom out the price action somewhere in this area here. And once the market finds that support, especially if we get a volume spike similar to the news, then I will be long the name. But I need to see off of this news, I need to see some bottoming, some support. Today, we gave it a bearish, we tried to give it a bearish engulfing, didn't quite happen, not by the textbook definition, but some support came in. So I've already got some lines to put in. Personally, though, risk reward 628 on 155 on options with an IV of 32% on front month. Not terrible, but for small account traders that I tend to focus towards, there's better names out there to choose. That being said, if I had to pick a direction on CRM, wait for that, whatever support level it's going to be. It'll come in between probably 147 and 150. I would be long the name from there because I think it's a good acquisition.
All right, sounds good. We're turning now to, I think, one of Buffett's companies here, Kraft Heinz and Company, and they obviously got whacked very hard, going from 65 under 30. But there are some believers that Buffett knows what he's doing. So, Marina, what's your call on Kraft Heinz?
Okay, so yeah, I like a lot of Warren Buffett's choices. I have before added them to my portfolio. Some of them I ended up getting out of. I never got into Kraft, I guess maybe because I've been with Coca-Cola for a while, which is similar to me, even though they're not, but it is. So this behavior is just, honestly, I would be looking for a long now. I think it's been totally like sold and it's ready to make a rally, to be honest with you. That's what I'm looking at as far as technicals. I don't think it's going to be hammered anymore. It just, from the technical side, right? This gap, it flew down, it tried to go down here, broke through this support area. It's just, yeah, and now it's headed back up. As far as I would definitely look for a quick entry here. This would be one of my like scalping moves, maybe for a couple of points up and gone to this particular area, and that's where the next decision making would be.
And the dividend is over 5%, so you get paid to watch the movie if it takes a little bit of time. But anyway, another take on it, Brian. Yeah, what angle are you looking at, Brian?
I am a trader, first and foremost. That's what I do. I trade, I write code for trading, I devise trading systems, I ram blocks together, and try to come up with something unique. This is maybe the only chart out of everything that we commonly go through where I am an investor. I agree 100% here. I love seeing this volume come out of nowhere here on the daily, on the run up to earnings. And if I were going to be looking at leaps, I would be looking at leaps on KHC. I agree 100% with the previous commentator. Yeah. It's going to be long. It's going to be slow. It's going to be boring. This thing has an ATR of 74 cents. Look at this cloud expected move. I mean, it's going to take some patience, but I'm an investor here in this name. I think they just got way oversold.
Yeah, and the dividend obviously can soothe the pain if it takes time.
Yeah.
All right. I think this next one is, where are we? WWE. Which I think is the world.
Yep, you're right.
Worldwide wrestling. So I don't want to get into anything violent here, but Marina, what do you think about World Wrestling Entertainment, which has been volatile? It's been as high as 100, been as low as around 58, and currently it's 73. So it certainly moves around. What's your call?
Well, right now the volume is really low. I really like this company. I just really like, I don't like wrestling. That's not, I have no preference to it, or, but what they've done to this particular industry and entertainment is phenomenal, but it's been around for so many years that I don't see how it could possibly keep growing too much, right? So that's kind of what I'm seeing here, is this channel that has just been stuck in, right? But it's not a company I wouldn't invest in. I respect what they did, but the guy that founded it just recently died also several months ago. Maybe that's the decision here of where to go. They're not sure as well. Obviously I don't know what the market is actually thinking behind the movements, but this is how I would be looking at this company. What's the next step? Where is it going next? Because, an era just ended, so the new era is here, and that's what I'm looking at. So if I was to play with it, it would be between this channel.
Brian, do you see anything happening here?
Yes, I do. I see. Okay, so the ultimate question, and this is not an answer of any sort. The question is, are we in euphoria? Are we in irrational exuberance? So this chart is one of those, kind of like Boeing right before it went off the cliff, which, by the way, it started to roll over before that second plane crash. What does WWE do different now between this relatively healthy channel, or not channel, that's the wrong term, this relatively healthy, boring, actually skull-numbingly boring move to the upside of slowly gaining value? What justified this? What has justified this volatility? Is this chart, it screams out at me just like some other charts out there, like when Powell speaks and we see 10% pump and dumps in Alcoa, and just these names we should not see it happening, like biotech. This company, what have they done to, over this period of time? We're talking, all right, so they gapped up here on 5/22 of 18. Am I reading that right? Yeah, 5/23 of 18. They gap up in May of 18, so just over a year ago. Did they ever do anything to justify a valuation of 98 on a fundamental basis? Much less a move, back down to 60, much less a move back up to 101, much less a move back down here. These charts scare me. These charts are symptomatic charts of what might be. And remember that market risk exists. So if I'm trading in Coke, if I'm trading in Exxon, blue chip names, companies like this are still contributing to the risk of trading in those names. And so this is terrifying to me. I don't like anything about this chart. If you can tell me, okay, they have tripled their worldwide exposure in 5 months, and they now sell five times as many tickets as they did going back in April. Nope. But we're traders. We're here to make money. So the swing is to the upside here. We have a long signal here, but these charts for the health of the general market really, really scare me. They very, very much do.
If you do get a rally, it might be fueled by some short covering. Their short interest is in double digits. But let's turn to some of these other stocks before the time runs out. And this next one's in the oil area, oil extraction. And it's CXO, Concho Resources. And oil's been in the news, that's for sure. So, Marina, what are we thinking about an oil stock, CXO?
Okay, so oil stocks for me have failed miserably in the past, so I really just stay away from them altogether. I don't know this particular company, but I've had very bad, I don't want to say luck, that's definitely not the word, just it hasn't worked out for me, let's say, with oil companies. I bought them mainly for the dividends, so I'm still holding on to a total dog because of the dividends, and But yeah, so I stay away from them.
This thing doesn't pay any dividend. It's all about getting the oil out of the ground, and it's at a 52-week high of 160, and it's down to 100. Now there is some lows in here at 100 that are interesting. Brian, around this 100 area, could it hold its water, or what do you think?
I'm leaving this alone 100% as well. I'm not touching oil until we figure out what's going on with Venezuela and Iran.
All right. Well, why don't we look at artificial hips and artificial knees, and we'll talk about Stryker. And Stryker is trading at 194. And what do you've got here as far as opportunity, Marina?
Okay, hang on. My chart is taking a little bit longer now. Hang on, sorry.
Sure.
If you actually, it would be better if Brian goes first on this one. My chart.
Yeah, Brian, go first on this. You probably have this stuff right up already. Medical equipment and supplies, and they've been doing pretty darn good in the last 6 months.
All right, so they have a dividend payment of 52 cents coming up on 6/27. Earnings are a little while after on 7/23. Let's take a look at the way they've behaved out of earnings in the past. Positive, positive, positive. Even if they did retrace it later, this is a pattern we don't actually see that often, especially in the current market. Now this is a market maker projected range, which means they are going to probably bring this in. I could be an investor on a pullback to like middle of this range and around the 187 area. I think this is investment grade. This is not trader grade.
Right.
But that being said, this range is high enough to make it trader grade. So the next step we have to do is, okay, how does the option chain look? This option chain is ridiculously biased to the call side.
Yeah.
So there we go. We've got
the
two
demographics
of five.
as well.
Yep.
The demographics are very good on this as far as, aging population, and these guys have artificial parts and stuff.
Let it pull back a little bit, get back to something a little closer to equilibrium, and then investment grade. So I've never said this before in this show. KHC is investment grade, and I think Stryker on a pullback is as well.
Yeah, I think you're right. Okay, let's go over to our China representative here, and what do we all think about Baba?
You want to
Marina,
go ahead?
you in there?
Marina, we'd lose you.
So, hi, can you hear me? My charts just totally went nuts. So
Yeah.
I'm saying out of everything that has to do with China at the moment, it's just way too much craziness.
Right.
This is not a market that I'm looking at, even though it can be really great at the moment, and it did fall. I'm not sharing my screen here. There we go. Now I'm gonna. Yeah, so basically, I mean, it's falling. It's kind of lagging back and forth at the moment. I prefer to just sit out and wait with China altogether. China has always been an up and down thing, even though I really love Alibaba's CEO. I think he's one of the coolest guys ever, but it's just, I'm kind of.
It's a great company, but there's a lot of news risk, is what you're saying. Great company, but a lot of news risk.
Yeah, and I really respect him. Like I said, I usually look for that, but I just think there's a lot of stuff is out of his control at the moment as well, and that's something you need to really understand.
Well, Brian, we had a nice pullback. We had a nice pullback from 200 to 150. Now we're at 162. Where do we go from here?
I agree 100% with everything that she has said. However, there's something I want to point out here. These volume spikes at reversal levels, which we had one here. This one was sort of out of the ordinary, but here, this volume spike indicates exhaustion of pressure to the downside. So if I was looking for something that had a good ATR relative to its underlying price and I wanted to day trade it, Baba right now is giving me all kinds of strong reversal signals, at least into the middle of this cloud in the 173 area. As far as swing trading it, no. And oh no. Baba's entire profit margin depends on the China US dollar exchange rate. And that is going to be the next front in the debate, trade war, negotiation, whatever you want to call it. That exchange rate is going to get screwed, and Baba is going to be the first victim to go. If I want to day trade this on unusual option activity, yes, I would be willing to do it here on this volume spike to indicate exhaustion of this downtrend. But otherwise, I am not holding this thing overnight. You couldn't pay me to do it.
All right, let's switch over to the interest rate market, which people have a lot of different opinions on, and TLT, which once Powell went into the pause mode, took off like a bat out of you know where, and right up in this neighborhood, it seems to have stalled a little bit. Marina, on the 20-year T-bond proxy TLT, what's your feelings?
It's just running straight up. I mean, it's a perfect trend. Look at that. It's a perfect trend line going up. So I would be, it might be already a little bit too late. However, if you continue on with this particular thing, I would probably wait right now, even if it retraces to go here. It's starting to show me a little bit of a double top that I would want to sit out and just see what happens. But it's been rallying too much for me. I get nervous when it's this much movement up or down. It doesn't matter, to see what the market is about to do. So it looks like it might kind of chill for a few minutes.
Brian, you got a call?
Yeah, I do actually. When I got the list this afternoon at 3 o'clock on the dot, thank you, organizers. And I know we only have 8 minutes left. I bought a June 130.5 put on this, and that is looking to grab kind of some quick gains and roll it out into probably, I'm looking in the area of probably July. So I'm going to be doing a directional TLT June 130.5 put long position on this, trade it back down into this cloud, and then roll that into a July position, depending on whether we're going to go back up or back down. So that's my answer. I actually opened a position when I saw this symbol.
Yeah, the enthusiasm for the Fed cutting while the market's at an all-time high and employment is at an all-time low is it sounds crazy, but crazy things happen out there. But the enthusiasm for lower rates might be telling us that on a short-term basis, we're overbought emotionally as well as physically.
Yeah, I mean, the put was 79 cents. Are you joking? I mean,
yeah,
the RR is there.
And if people want to come out, and if people want to come out, the order imbalance could be pretty heavy because Tom, Dick, and Harry are pretty much long treasuries by now.
Yep, everybody is.
All right, let's get the last two out of here. ZM, and we are going to go to Marina now and find out how she feels about Zoom.
Well, to be honest with you, I just recently got into this. It's an IPO. I'm really enjoying this company, so I'm going to be very optimistic about it. I got in on it pretty decently. I like IPOs, although I have to say, nothing to do with Zoom. I'm just killing myself over Beyond Meat. I do not. First of all, I didn't get in. I was waiting for the earnings, which just happened to fall on my birthday. So Zoom, I'm good with. I think it's an awesome company. I think it's a little bit overbought right now. I would wait until it goes back down. There's not much data going on. I would wait until it goes down around 85, maybe even a little bit lower, to see what's happening, because it did jump really high. And then it's a company that is super strong. It's been around forever. If you talk to people, everyone in the internet marketing world basically uses Zoom in one way or another. So it's such a huge sign. So yes, I will be totally long, invest long in this particular stock, which I am right now.
These new issues can get very volatile. I'm looking at a PE ratio on my screen of 2,650, which is probably the highest PE ratio I've ever seen. So I don't know what's going on with Zoom, but they better start making money with that kind of ratio, with that kind of valuation. Right?
Okay.
Anyway, Brian, what do you got cooking?
All right, so I have been an active options trader through Tilray, through Beyond Meat, and here's the key figure. Short percent of float is 33% on only 15 million total shares. There are not enough shares to go around. Short percent of float is only going to increase. This thing has the opportunity to, just from a supply and demand point of view on the shares themselves, doesn't matter what they make, doesn't matter what the company is. We could run this PE ratio up to 1 million. It doesn't matter. What matters is the supply and demand on the shares. This has that same setup as Tilray, as Beyond. And so you run into kind of some particulars with trades like this that you have to pay attention to. You have to pay attention to lockup periods where the employees can dump their shares. And
Right.
then you also need to not be greedy. 100% gain is 100% gain. 300% gain is 300% gain. The people that get wiped out on stuff like this, if this thing, I mean, based on the float and the number of shares, and this seems to be maybe the indicator of the end of a business cycle. It's a Wall Street scam. We're only going to issue 15 million shares. We're going to run it up to 300 and drop it to 60.
Right.
Slack, another candidate for this. We're getting into these unicorn IPOs, and Zoom, I think, is starting to get into like that 80% of the margin of those marginal IPO shares. This is the Wall Street. This is where they build those skyscrapers. I think Zoom will do it. Now, IV on the options is starting to get up there. It would be a high risk, high reward play right now to get in there with options, but I'm very, very tempted to do it in the morning.
All right, let's just do a quick 30-second deal on Tesla. And that stock obviously has gone from 387 down into the 175 area. Now it's back at 217. 30 seconds on Tesla, Marina.
Okay, so this is one of those stocks that I was in. I gratefully got out right here at 387 because I just
great job.
Oh my God, but he is such a nutcase that now I've had so much respect for him. He's just too much of a nutcase. He's saying one day everything's gonna be great. The next day he was saying, I got out before March, before he had to pay off the debt. So yeah, that's actually the money that I put into Zoom and a couple of other of my IPOs. Anyway, so yeah, there's no way. I just wouldn't even touch this stock. He's just so outrageous.
It is that way. What do you think, Brian? Anything quick?
Yeah, real quick. Tesla is a perfect stock to test out your 5-minute indicators. Whatever indicators you're using on a 5-minute chart, check them out on Tesla. If they work there, they probably will work anywhere other than beyond that. The guy is worth more money in SpaceX now than he is on Tesla anyway, which really kind of creates a lot of moral hazard. Long term, not even touching it.
Okay. All right, guys. How about a trade idea or some kind of special thing you guys got to close it up, Marina? And how people could get a hold of you?
Oh, well, the best way to get a hold of me is thetraderchick.com. I mainly do futures. That is my thing. I love to work with beginners who want to learn how to do futures or actually just read the overall markets, and for people who are struggling with futures. I'll be honest with you, right now, I'm just kind of sitting and waiting to see what Beyond Meat is doing. I really love disruptive markets. I personally am in Uber and Lyft. I don't care if there's too much indecision at this moment. It will go where it's supposed to in several years. So from my take, I love disruption and I like really solid CEOs who have their heads on straight. So that's how I look at those stocks that I invest in long term. That's
okay,
it.
great.
Thank you for having me so much.
Oh, you bet, Marina. Always a pleasure. And Brian, quick idea plus how to get a hold of you?
Yeah, I want to also say thank you to Marina for sharing this conversation. It's great about trading. You can meet new people, and there's always something to learn. You can get a hold of me via alphashark.com. I should be trading right now. This is our main webpage, and you can download a quick workbook to sort of learn what we're all about here. It's alphashark.com. Download that workbook. It's free. And then that will explain this little scanner doohickey I've had up the entire time. We watch for unusual option activity throughout the day, all day long, just like the Nigerian brothers do on halftime. Usually we know what their trades are by 11 a.m. Eastern. And we combine that along with custom indicators and custom tool sets and strategies in order to really maximize our trading ability as a group, as an entire group among our live trading room.
Okay, great. And thanks, Brian, for you being here. I'm Jim Kenney with optionprofessor.com, and I just wanted to throw in something that I thought would be of value. The cloud companies and the payment processors that have had such great momentum, the Adobes, Twilio, ServiceNow, Salesforce, Visa, MasterCard, PayPal, I'd suggest very strongly hedging or protecting some of the gains you have through using puts, married puts, collars, or replacement calls, because there did seem to be a little turnaround there. And if the stock market can't get through 29.50 and turns down, these could have some vulnerability. So that's my 2 cents. Anybody who has questions to get a hold of me is real simple. You go to optionprofessor.com and you can go to my weekly podcast, or you can shoot an email to optionprofessor@gmail.com. Excuse me, at Gmail, and send a question if you have it. Real good to be with Marina and Bryan here today. I'm going to throw it over to David, and thanks a lot for having us.
All right, thanks. Good show. Lots of good information. Some new symbols this week. I don't think we've ever covered before on the show, so that was good. So just a quick reminder to everyone watching: be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get access to the recording of this or any of the past shows. Also, both shows will be back next week. So June 17th, Monday, 1 p.m. Eastern Time will be the next episode of Crowd Forecast News. And then on Tuesday at 4 p.m. Eastern Time, the next episode of this show, Analyze Your Trade. So, and just finally want to thank my guests again for this week. Marina Villatoro of TheTraderChick.com, Bryan Klindworth of AlphaShark.com, and Jim Kenney of OptionProfessor.com. Thanks, everyone.
Thank
Thank
you.
you.
Thanks, David. Bye.